Hello, everyone. Welcome to Billing Platform's webinar, Harnessing RevRec Automation for Advanced Revenue Management. We're glad to be with you today. My name is Matt Ream. I am a Director of Product Marketing here at Billing Platform. And our special guest is Morgan Stanton, Principal Product Manager, who oversees our RevRec product, among other things. So welcome, Morgan.
Thank you very much. Glad to be here.
It's great to have you. Let's just take a quick look at the agenda. We're going to talk initially about some of the common challenges. Hopefully these resonate with all of you. But we, in the companies that we work with, there's a lot of things in common that they face that are challenging as they try to implement revenue recognition. We're going to talk a little bit about how technology can streamline and automate the solutions to those challenges. And then Morgan's going to give us a demo on the Billing Platform RevRec module. And then we've got some time at the end for questions. So please feel free to submit your questions through the interface or save them for the end and we can call on you. So with that, Morgan, let's go ahead and get into some of these challenges. What kinds of challenges are we seeing companies face in RevRec?
Awesome. Thank you, Matt. As Matt mentioned, we'll start off here with giving kind of a landscape of common challenges that we've seen out there with companies kind of solving their revenue management process, and then specifically revenue recognition, kind of the accounting side of things within that process. We've got 5 kind of larger themes that we'll go through today, outlining some of the common challenges we see. First of which is manual processes and inefficiencies. 10 years ago, everything was done in spreadsheets, and now we're all trying to automate and use some new technologies there. So we'll talk about pain points related to those legacy processes. Then we'll dive into some of the complexities of revenue contract management, right? This is a really complex space, a lot of dynamic things required of accounting teams to manage revenue contracts and then downstream impacts of those. Then we'll hop into discussing data integrations and fragmentation, right? So all of the data flowing into systems solving these revenue contract management and just revenue lifecycle management processes, and some of the fragmentation of data and kind of the challenges resulting from that. Then we'll hop into discussing compliance and auditability, right? Once we've actually automated or are performing a lot of these processes, they need to be auditable. We need to go and hand over documentation and visibility to either internal auditors, external auditors, all for satisfying those external reporting requirements and internal control requirements. And then lastly, we'll then talk about reporting and insights, all of the challenges related to getting the data out, viewing the data that you need to run your business, and then actually generating insights from that to help streamline the business and all of the surrounding challenges related to that. So with that, let's actually hop into the specifics for some of these topics. So as I mentioned, first of which is manual processes and inefficiencies, right? So as I mentioned, there's historically been a reliance on spreadsheets and manual data entry in the past. We've seen this drastically change in the market with companies modernizing their revenue management solutions and processes, but there's still, in many cases, a manual component somewhere in the life cycle. So wherever that is, whichever percentage of your revenue management process is still being done manually, there's kind of errors inherently that exist in that because you have human beings entering data, human beings managing spreadsheets, and we're all human, right? We are not machines. So there's risk of error as well as just wasted time. It takes a lot of resources to perform things manually. So definitely one of the biggest pain points that we see in the market, we see with accounting teams, is how do we mitigate these risks of error and how do we save time? So we don't necessarily need to decrease the size of our accounting teams, but we can redirect their energy towards more value add tasks at hand.
What are some of the most common processes? Like get into some of the specific processes that we see. Like what are some of them that take the most time and are the most error prone?
Sure, sure. So there's a couple things top of mind that I can think of. One of which is in the new era of ASC 606, we have a lot of new requirements on how revenue is recognized. And one of the key components there is we're not recognizing revenue based on how much we've billed for a particular product. We're calculating the standalone selling price of those items, or i.e., kind of the fair value or the market rate. What is this product actually worth? And that could differ from what we're actually selling it for, right? A lot of companies are selling things at a discount within a bundle to make the kind of the package more attractive to customers. Well, downstream on the revenue side, we actually have to determine a standalone selling price for each product so we can reallocate revenue. So we're recognizing revenue based on relative SSP amounts rather than billed amounts. And the process to determine standalone selling price in a lot of cases for accounting teams is very complicated, right? We in some cases the companies take historical billing data, historical revenue data, saying, hey, what have we been selling this product at for the last rolling 6 months, or what have we been using as standalone selling price for the last 6 months? Let's take a weighted average of that to calculate what the standalone selling price is for this particular product on this particular contract in this business segment on this day. And accounting teams have typically in the past uh, pulled this data from all different systems manually, dumped it all into a spreadsheet, and they actually have an accountant going in and creating a spreadsheet, in intervals, maybe every 3 months, maybe every month, to define these amounts and then upload that table into a system for the system to reference. And that is error prone in so many different ways, right? Pulling the right data is one pain point. On did the person pull the right data? Did they put it into the spreadsheet correctly? Are all the formulas in the spreadsheet correct? How can we go in and if we've got hundreds of thousands of rows of data in that spreadsheet, how do we make sure that information is complete and accurate? And all of that takes a lot of time and energy, and it's not foolproof, right? It's not a system doing this. It's a human being where Excel spreadsheets, while fantastic, I absolutely love spreadsheets, they do have their limits. They don't have the built-in structure and controls of a modern system to really ensure that this is happening right and happening at scale and happening in real time. So that's one example, and then I'll give one more kind of maybe more simple example, and that is if we're maybe managing our contracts, right? So we're creating revenue contracts from orders, and we're updating and modifying those contracts from orders. A lot of times in the system, maybe you have the step of ingesting order data and creating contracts automated, but subsequently, when you modify those contracts, you need to modify them on the billing side of the house to get your invoices right. And then you also need to modify the contracts themselves, the revenue contracts, to push down the appropriate changes to the GL. And in many cases, you have accountants going in and making those changes in a system, via the UI manually, and that obviously exposes risk of the user clicking the wrong buttons, fat fingering the wrong dates, where the system's doing everything properly that it needs to based on what the user defined it to do, but there's still that element of a user needs to go in and define something, and they could define it wrong. Maybe they have the wrong information written down, at their desk, or they just click the wrong thing before they submit. So two examples there of larger processes that are too reliant on actual human beings to do something, or a smaller process that has big implications downstream that's still reliant on a person clicking the right button. So our second one here is reconciliation of data from multiple sources, and how that can really lead to inconsistencies and inaccuracies. And this ties back to my first example on calculating standalone selling price, pulling data from multiple systems, and making sure that it's complete and accurate. So when we have information coming from different sources, obviously we need to reconcile that before we can use it. So, being able to perform that reconciliation in an automated, in a systematic way or a programmatic way, is inherently an extra step for one, and it exposes us to missing things if we have manual reconciliation processes. Another example here that I think is extremely relevant for modernizing the revenue management process within a solution and automating it is we have systems now that are kind of pulling everything together. It's an exciting time in the revenue management space where historically we had billing systems, and then separately we had revenue recognition systems, i.e. ERPs. And then separately we had order management systems. And now you're seeing this convergence of, okay, let's take our orders, from sale to billing, right? So we take our orders, we generate our invoices, and we have our products that we've sold, our subscriptions, usage products, everything from a billing perspective to generate our invoices. And then we have the revenue recognition and accounting side of the house all being centralized into one system. And I think that is one of the current and long-term visions of BillingPlatform is we're bringing that all together under one roof. And when you do that, you open up the opportunity to have all of that data, all that information in one place, so you can reconcile it all in one place, right? So instead of pulling data from disparate systems, reconciling it to make sure everything matches, if you can centralize it and then programmatically reconcile that data from end to end, from sale all the way down to GL, you are providing an opportunity to automate this whole reconciliation process, and remove that manual component. And for one, that minimizes your errors, right? Because if you're programmatically reconciling all within the same system, the data is all there. Everything is at your fingertips. And probably more importantly, everything is at the fingertips of the system. So we're really talking about setting up an organization to reconcile this data, that's used to perform all of these really key accounting activities at scale, because the system is doing it, and the system can perform reconciliations, at such a larger scale than a human being, and it can do it in real time, right? It's not waiting until month end or the day, during monthly close to have an accountant go and do these reconciliations, at which point you could find, issues or discrepancies that then you have to go hunt down and extend your monthly close process. What if a system does it in real time as transactions, as data comes into the system, across the month? So by the time you hit month end, the system did it all for you. It's done. That part of the monthly close checklist is done, and you can move on to the next step. So this really speaks to the point of, hey, reconciliations historically have been manual. They've been done by accountants. It's efficient. It's not scalable unless you want to keep hiring an army of expensive accountants. And there's really an opportunity there to minimize risk and risk of inaccuracies, inconsistencies, and streamline the process. All right, so let's talk about data integration fragmentation. A couple points on this. First of which is it's pretty common that we have contracts or revenue bundles with multiple performance obligations and maybe even variable consideration thrown in there. And When we're talking about integrating data into the revenue management system, the data needed to kind of create these contracts, manage these contracts, and update and modify as needed to handle variable consideration scenarios. There's data coming in from multiple sources, right? So it may be we've got contract information, order information coming in from like a Salesforce or some other system like a CRM. And then, if we have things like variable consideration, maybe we have data coming in from a professional services system there that's tracking different things, or even usage, right? If we've got a usage scenario, maybe usage is coming in from a separate system there. So when we think about this, there's data integrations and fragmentation for centralizing data coming in from multiple systems to perform the management and recognition function within a single system. And there's risks involved with that, right? There's timing risks, there's risks of not all of the data being integrated properly. And the challenge here is pulling together an architecture of not just the revenue management system, but everything that feeds into it to solve all of these problems in one place. So we'll talk about later how technology can solve that, but that's kind of a large problem that we're seeing in the market is centralizing data so it's no longer fragmented once it gets into our system or any other revenue management system for that fact. Second point here is and I've mentioned this before, but challenges in calculating standalone selling price and allocating revenue across elements. Again, multiple pieces of data coming from different systems. How do we pull all of this together, taking the right attributes of that data and kind of combining it all into a cohesive process that happens in the right sequence with the right information? So, again, fragmentation of this data that's how it's coming into these systems. So solving the problem of integrating it with the information you need and centralizing it is a key pain point that can be solved here with technology. All right, next point of complexity or challenge is complexity of revenue contract management, right? So we've got potentially a lack of integrations capabilities that leads to data and process silos. And this is related to that previous slide, but it's really kind of the downstream impacts of, are there limitations in integrations from other systems? Are we getting all of the data we need from those systems to perform what we need to perform, to automate the processes in our system or any revenue management system? And that data is often siloed. Maybe there's separate processes. Different teams are working on different parts or different systems, and misalignment of something that's happening in the CRM system and feeding data in something, different teams working on the professional services or the usage system, and you're not getting all of the data you need to match, to link, hey, there's usage coming in from the usage system. How do we tie it and connect it to the data coming in from the CRM system? And we see a misalignment in that a lot, which creates a lot of pain and extra manual work potentially for the accounting team to connect all of that data in order for it to automate within the revenue management system. And then secondly here is, okay, now we've connected that data from those different silos. Maybe we've aligned our processes. How do we ensure that data is accurate and consistent? It's again, another step in the process, speaks to that reconciliation point I mentioned earlier. It's complex. There's a lot of moving parts. It's very dynamic, and it's a pain point that accounting teams out there are trying to tackle. It causes extending time, extra processes, extra manual steps, and it can certainly be streamlined with technology. If we bring this all together, and let's say we're performing all of these steps, some of it manual, some of it automated. Let's say we even have everything automated using technology. At the end of the day, we still need to stay compliant with not only accounting standards, i.e. ASC 606, but we need to adhere to internal control standards. Um, all the fallout from the early 2000s, where we had Arthur Andersen and Enron. Coming out of that, the regulatory environment came up, or the regulatory government came up with standards on auditability, what needs to be audited from an internal control perspective, everything the auditors need, right? So uh, all these accounting teams need to stay up with evolving accounting standards. They need to implement complex rules to adhere to those standards, right? From an accounting perspective, making sure their financial statements are complete and accurate. And that includes things like deferring things properly, accruing, recognizing revenue in the right amounts at the right times, using the right business segments, and then reporting on that information to compile the financial statement. So there's much higher audit scrutiny these days, and it is certainly becoming more robust and more of an emphasis point. And that's just continuing to add more things to do for the accounting team, more requirements, more that the auditors are asking of them. And that's always leads to audit delays, which obviously results in delaying monthly close because there's more things to do. So that's certainly a large but also growing challenge for accounting teams to keep up with. And our last one here on common challenges is reporting and insights. So we have kind of a situation that we can get into where accounting teams are doing everything they need to in pursuit of compiling the financial statements, right? That's the ultimate goal. We close the books, create our financial statements, and our SEC reporting teams hand that over to investors and C-suite. But then investors and C-suite come back and say, "Okay, great, you compiled these financial statements. We want more clarity. We want more color on what all of this means." And in many cases, when accounting teams are stretched to just get their basic work done, they don't have the luxury of having all of these extra reports that aren't necessarily required to compile the financial statements, but would be fantastic to provide stakeholders with more visibility on the why, when, and how of the financials. And technology will certainly, if done right, give that accounting team the luxury of time to invest in that type of reporting. But taking a step further, technology solutions can potentially do that for them as well. So, limitations in time, limitations in data, accessible data, all lead to kind of this current challenge before we talk about the technology that can solve it. And second point here is challenges in providing real-time insights to make business decisions today. If we think about the typical monthly close process or the cadence of accounting teams, you pump through all of your financial transactions for the month. Then at month end, you have a bunch of things to do, to accrue, to reclass, to defer, to recognize before you can generate insights for business, for the business, for the C-suite to actually say, okay, we need to change direction, or validating our current direction is correct, our current strategy is correct. So if we think about what does the business need, well, the business needs that information right now. Doesn't matter if it's the first day of the month, the middle of the month, the end of the month, they want it now. So with legacy processes and doing things manually without a system, that really becomes very difficult and or impossible. And we'll talk later about how technology can help improve that. But that's really one of the largest reporting challenges for any accounting team, is to provide that real-time insight. All right, so let's talk about how technology can streamline and automate a lot of these challenges that we mentioned in the previous slides. We've got three high-level themes here that we'll dive into more detail in the subsequent slides. And those three are performant and comprehensive integrations, configurable rules-based automation, and intuitive real-time and comprehensive audit trails. So with those three high-level themes in mind, let's dive into kind of the details of these. First of which is performant and comprehensive integration. So few key points on this. We really need for our accounting teams seamless integration across systems. And when I say seamless integration across systems, I don't just mean, flowing order and transaction data from your CRM, like a Salesforce, down to your revenue management system. This is really holistic, right? If we think about actually facilitating the end-to-end life cycle, we're talking about, okay, we've got orders from our CRM. We've got implementations and percentage completer milestone data coming in from a professional services tracking system. We've got usage consumption coming in from a different system that's usage against some of those products we have from our order. So there's data coming in from all angles, and a revenue management system that can actually automate the process end to end needs these seamless integrations across these multiple systems. And it needs to pull this data in a centralized place for data consistency, as well as real-time visibility. So the performant aspect of this is real-time visibility. If you have millions of transactions coming in from your CRM and millions of transactions coming in from your usage system, and those need to be tied together in a centralized place to operate those processes in revenue management, it needs to happen in real time. You need to have visibility of that real time data, and it needs to be consistent to actually perform the process, accurately and at scale. And my second point here is if you have this, you can reduce discrepancies and anomalies and inconsistencies to ensure all of that information coming in from different angles is accurate, complete, and up to date. So you have it in real time, or downstream, if you have a true real-time revenue management system, to do all of those processes in real time throughout the month instead of waiting until the end of the month. So I think rules here are a key point, and I want to emphasize the power of solving revenue management automation, really embracing a rules-based framework. And my first point here is we can automate key revenue tasks. When I say tasks, I mean steps in a process with a rules-based framework or rules at each step of the way to not just solve 70% of your business segment's needs, but solving all of it.
Morgan, you've seen a lot of our competitors. Most people talk about rules-based automation, right? It seems like it's a fairly common way to handle these kinds of processes. For the people on this webinar who are interested in learning about BillingPlatform, what's unique about BillingPlatform's use of rules compared to other competitors?
Yeah, that's a great question. And from what I've seen with competitor solutions out there is not a full embracing of the power of rules. So, when a solution out there says they use a rules-based framework for this and that, I've seen kind of a limited use of rules, right? So if we take a high-level example and we talk about the kind of end-to-end from order to general ledger, there's, I don't know, let's say 10 steps along the way to take that order, create a contract, bundle things correctly, define standalone selling price, perform contract modifications, generate recognition schedules, update those schedules, all of those steps in between. And a lot of those systems out there have rule frameworks to define, dynamic logic for some parts of it. For example, I think most or all of the solutions out there use a rules-based framework to generate GL schedules, right? Amortization schedules, revenue recognition schedules. And so they'll say, oh, we use rules. Well, it's like, yeah, you definitely use rules for that step. But if you as a potential buyer of one of these solutions or a user take a step back and look at the end to end, look at all of those 10 steps, maybe 6 of those 10 are kind of hard coded, where the solution says, oh, you have 3 options in this step, and you got to pick between those 3 options. We know that maybe some edge cases out there have a fourth or fifth option, but you're going to have to use these 3. And if you need something else, you'll have to do that manually outside of the system. And we saw that as billing platform, we saw that as an opportunity to say, no, we're going all in on rules. We're going to provide our users and our customers with rules at every step of the way to define dynamic automation for each step. So instead of saying, okay, for these 4 steps, we have rules, and these 6 steps, it's fixed, here's your options, we've really given our users the power to say, no, our business is unique and we need a unique way to solve these problems. So, really embracing rules as a powerful thing to automate each step of the way unlocks, I don't know, like not just thousands, probably millions more permutations of automating scenarios that maybe some of our competitors cannot. And that kind of naturally leads to my second point here of using workflow to automate and streamline processes. So this is one of the strengths of our system as we've designed it from the ground up since we were founded is we are an extensible platform where you can build really almost any business process on our system. You can create custom entities, custom fields, custom workflows, custom relations that are not separate from what we have out of the box, but are used in tandem. So if you think about that 10-step process that I kind of outlined before, where you've got rules at each step of the way to automate decision making and automate the process, well, you can then layer on workflows in our system, which are a form of automation that user can configure with point and click to say, okay, at each step of the way, we have a rule that made this decision to go perform XYZ actions in the system. You can then layer on a workflow to say, okay, once that information, once that data is generated from that rule, we're going to trigger a workflow. And that workflow can do anything. It can go reach out to another system to turn off and on a subscription. It can send an email. It can go update other data in the system. For example, I had that standalone selling price example. Well, maybe you have a rule that generates a contract modification to a specific product on a contract. A workflow can be triggered off that to go and dynamically update the standalone selling price table in real time. So things like that, where workflows not just define and perform a process, but can really enrich it to unlock new reporting insights and more real-time visibility or auditability downstream. So as I mentioned previously, the compliance environment is massive now, and it's always growing. So if you have a system that can automate a lot of these compliance and audit trail needs, the auditability of the data of the process is already built into the system. So you as the user don't need to go at the end of the month and do a bunch of extra things and pull reports. It's already there, and it's not only accessible when you need it, at the end of the month, but it's accessible in real time at any day of the month. And so you can either, have your reports, have dashboards within the system. So once you log in, it's right there for you, or that data is accessible to integrate downstream to, let's say, a Snowflake. If you have a data and analytics team that wants that data now, right when it happens in our system, it's there to send to them to feed into their dashboards and analytics feeding from a data warehouse, data lake solution like Snowflake. If we think about audit trails in these types of systems, we need to think about it from an auditor's perspective. So if a solution has all of the audit trail information that doesn't just exist in the system, but is formatted and presented to users in a logical way that makes sense for accountants, that really takes out any sort of manual process needed to reformat and pull that information in order to be ready for a user to digest it. And it simplifies access to that historical data to get accountants, auditors, and leadership comfortable that what was just automated is complete and accurate. I wanted to provide a quick demo of just a specific example of how this can be done, or how a specific automation can be done for revenue management within BillingPlatform. So I'll briefly go through the demo I'm about to show you, and then I'm going to hop into our system. I've got a simple scenario here where we are automating contract updates. And in that, let's say we've got a subscription within a bundle. So it's within a revenue contract, kind of under ASU 606. And that subscription is early terminated in this case. And I'll show you how BillingPlatform and our rules-based framework orchestrates the management of the contract and the contract modification. And what specifically I'll be showing you is our revenue contract update rules, which will do the automation to orchestrate the kind of the update of the contract based on the update on the billing side of the house of the actual subscription. So for an overview, I set up a quick account called Webinar Inc. And with Webinar Inc., I've sold them 2 subscriptions, a gold subscription and then an add-on, starting on April 1st of this year, going through to March 31st of next year. These 2 products on this view is from a billing perspective, right? We had an order come in. We said that order had a bundle with 2 subscriptions. We created those. And I'll just quickly go into here and show you the account product, which is kind of an instance of a product we've sold to a customer. You see here, we've generated charges that are going on invoices, right? So this account product is really the connection or central point connecting between the billing module and the revenue recognition module within our system. And now that I've shown you the products we've sold and kind of the connection to invoices, let me show you the revenue contract. So I've created this revenue contract within the system that pulled in those 2 products that we sold on the billing side of the house, and now they are performance obligations here within the contract. And in this particular scenario, both of these are annual subscriptions, but let's say an amendment came in from the CRM system saying, hey, actually, we want to early terminate one of these subscriptions, but not both of them. So let's say we want to actually early terminate this gold subscription. Instead of ending on March 31st, we want to end it on 12/31 of 2024. And we're going to use our rules-based framework to show you how an update upstream at the billing product level flows automatically downstream to not just update this product in the contract, but actually perform the contract modification under ASC 606, as well as the subsequent impacts on the GL. And how are we going to do that? Well, we're going to do that using one of our many rules-based frameworks here, but this is the RevRec contract update rules. And I've got a rule here defined to say, hey, when an account product gets updated, when that billing product gets updated, I want to push down that change to the revenue contract. I want it to be a contract modification, type cumulative catch-up, and I want the modification date to be today's date. So that's a little overview of the rule. So with that, let's actually see this in action. So here's our gold subscription. I'm going to do this via the UI, but I'd say most of our customers actually have this driven via API. But for demo purposes, we are going to do this in the UI. So as I mentioned, we want to early terminate, right? So instead of March 25th as my end date, I want to go to December 31st, 2024. So once I submit that change, so we've now early terminated this subscription, and I'm going to regenerate the charges on there from a billing perspective. And from there, we want to see what happened to the revenue contract, right? So we just early terminated this subscription. On the billing side of the house, the amount decreased, and we then go down to the revenue contract here to see, did anything happen, right? So from here, if we go down to the revenue version history, you can see I had created this contract before the demo. I had added things to it to where we had a contract with a total value of $18,000, and I updated the billing product here, but you see a new kind of version history of the contract occurred. That rule, once the billing product was updated, executed and actually went in and performed a catch-up modification on this contract. Today is 9/17. The date of the contract modification was 9/17, and it performed the catch-up and it updated the products in the contract. So now if I go back to the contract, instead of total contract position of 18 grand, it went down to 15. And amount billed to date says 18 grand here still because a credit was created in the system. I still need to go and approve that credit for the amount billed to go decrease. I think in this environment, I have credits to be approved manually instead of automatically. But you can see here that that rule did all of this live. And if we had this driven by orders being ingested into our system, that would have happened automatically instead of me going in and doing it via the UI. But this really highlights the power of the rule automation, right? So this rule that we set up, once I did something upstream in billing, it automatically went down and performed those revenue management processes automatically. And it didn't just go update those the contract automatically. It actually gave us an audit trail to say, yep, the rule did this thing. Now I want to go see what this thing is, and it gives me all the information to know, okay, here's when the contract was updated, here's how it was updated. And if we peek into one of these products here, you can see, okay, here's for this particular product, we have a new change. And for time purposes, I won't go all the way down to the general ledger, but the GL entries generated from this new version of the contract actually have a link to this version here. So you can actually go onto the general ledger, see, oh, these journal entries got created. How and why did they get created, and what can I tie them to? And they have a hyperlink back to here where you can actually tie out the GL that just got generated back to this particular change that was performed by this automated rule. And with that, that is the end of my demo. So I will go into the Q&A section.
All right, thank you, Morgan. That's a great overview and a great use case that you showed us there. We have had a couple questions in that I'm gonna throw over to you about a lot of them are about the revenue recognition solution. So first one is, how does your solution handle complex contracts with multiple performance obligations?
Yeah, great question. So this really comes out of the new ASC 606 requirements where we're forced to bundle into revenue contracts and reallocate amongst performance obligations. And our solution is not just built to solve this problem within the revenue recognition module. It flows all the way up to our product catalog that goes, and handles both billing and revenue recognition. So in our product catalog, we can define performance obligations of different types, define how standalone selling price is configured. We have package functionality where you can group products into packages and then add those packages of products into revenue contracts and different bundles. And from there, we can use attributes of those products to automate the building of revenue contracts and grouping of performance obligations into those contracts. And really any piece of information on the product, on the order, or any other data that you want to integrate into Billing Platform can be used to drive that logic to group performance obligations, create performance obligations in those bundles in order to perform kind of the ASC 606 contract reallocation logic.
Great, thank you. Next one is, what scalability features are available for maintaining compliance during periods of rapid growth or business model changes?
Yeah, also a great question. So businesses are always changing, right? It's not like when you implement a revenue management solution that however your business operates, the products you sell are the products you will always sell. And the configurability of the system itself is really a requirement to future proof yourself and your business to continue operating and updating how the system automates as your business changes. So, scalability is really built into how we not only built our solution from the ground up, but how we continue to enhance it. And it really comes down to what powers does the user have? What functionality can the user update and change and modify in the system throughout time? And we give our users the ability to not just create new products, new performance obligations, and new rules, but you can also go back and modify existing rules, existing products. So how the system performed the automation yesterday could be different from how it works today if you as your business decide, you need to operate differently, you need to sell things differently, or maybe you need to account for things differently because your auditors mentioned, hey, you need to start doing it X way instead of Y way. And all the tools are there built in. Every time we build an enhancement, we're thinking about not just backwards compatibility, but also forwards compatibility. What tools does the user need to update and change these things on the fly as requirements change?
Great. Next question, how long does it typically take to implement and automate revenue recognition in a large scale enterprise?
Ooh, that's a loaded question. So
Yeah.
I'm going to start with it depends. It depends on so many variables, right? We've got customers of ours that are large enterprises and have many different scenarios and use cases, but from a rules-based perspective, though all those scenarios can be handled, with maybe a few rules, especially if they're making those rules dynamic. And in that case, implementations can be several months. If there's other scenarios where a large enterprise has many different business units or legal entities that weren't homegrown. Maybe they made acquisitions, and those different entities are running on completely different ERPs, completely different CRMs, and have different accounting teams with different needs. Well, then you're talking about extending implementations because you're really implementing one system for multiple companies in that case. And in that case, it could extend implementation by a month, could extend it by 2 months. It really varies depending on the complexity, and complexity of how many systems are we integrating with, what type of processes does our system need to do to reconcile that data once it comes in, and how many different types of rules and pieces of automation are required for that company to perform their accounting as well as generate all of the reporting and insights that they request. Sometimes companies want 10 reports to run their monthly process. Some want 20. It all depends.
Yeah, that's a great point. Everything's so unique. It depends on the customer, the rules and the data. Is their data ready for, integration with a system like this? And, I think we continue to see customers that, that start with integrating a couple systems move them, migrate them onto the billing platform, and then add others as they go along. So that seems to be a fairly common approach.
Yeah, and I have one last point here on that, and that is if you are a large enterprise company out there and you're looking for modernizing and you're looking for a solution like this, uh, please have your accounting teams and your billing teams and you as a business uh, ready to do this, right? And that means going in and identifying and documenting what you want out of the system. What are your requirements? What problems do you need to solve at a more granular level? So when you start the implementation and you have a system integrator or our professional services team begin this process, you're ready with what you need. You can hand over that information in a granular and clear form, so the people implementing have all the information they need to generate the solution and configure that solution and test it. Because we've seen cases, and I've heard of cases where maybe a enterprise out there is trying to implement Oracle ERP, not NetSuite, but big Oracle, for example, and they start the implementation and they don't really know what they want. They know they want to streamline and modernize, but they don't really know much after that. If you go in unprepared, it's going to extend the implementation time, because then the professional services team or the integrator that's implementing is going to need to extract that information along the way, which will inevitably cause them to have to go back to step one and rethink the solution and the architecture of how they're implementing as new information comes up.
We don't like to brag, but we are number one in all the major analyst reports. So if you're looking for a solution, obviously you're going to look at those reports, check them out. And then feel free to contact us if you have any questions. We have just updated our website just this week. So check that out. It's got a lot of great information and it looks even better than it did before now. You can go there, you can sign up for a test drive of any part of the platform. You can contact our sales team if you want to reach out to Morgan with product questions or me, just to have a nice chat. Feel free to do so. And again, I'll thank Morgan for joining me today. I hope this was beneficial for our attendees, and thanks to all of you for attending.
Thanks, everybody.